Welcome Bitcoin friends, it's Bitcoin Memo. Today we're going to look at the Bitcoin charts, look at this current volatility we've been having, look at whether are we going to drop lower or are we going to go back higher. We'll also be looking at the comparison between Bitcoin, Ethereum and Link, how they've performed this year. We'll be doing some long-term analysis on Bitcoin over the weekly time frame and also shorter-term analysis. So stay tuned, hope you enjoy this film. So looking at Bitcoin on the daily, we can see we were in this massive triangle pattern here with such a big range between 42,000 and the first touch point was at 28,000. Or if we include this one, it would be at 25,000. So very volatile range here that we've been bouncing between. We did break this in the last few days. We had a pretty decent drop from the break was at about 33,600. We came all the way down to 28.9, 28.8. And since then we've had a bounce. We got back up to 33 and now we're sort of in the middle of that range around 32. So very volatile moves at the moment. So what's going to happen next? We can see these two yellow lines here. This is the 50 daily moving average and the 50 exponential daily moving average, and we did sort of get a bounce in this area. And it was a decent bounce, and we have come back and retested the top of this triangle, and currently we are coming down again. But I don't think that this means that we are going to have a big drop. I think there's a potential that we do come back into this triangle, and there's an argument to be made for both sides. So if we just zoom out here, you can see I've got this trend line drawn, this dotted trend line here connecting the bottoms, and price is going higher, and this is the RSI. We can see with the corresponding points the RSI is going lower. So this is a hidden bullish divergence, and you can see we did get quite a bounce so far from that divergence. So this is Bitcoin on the 4-hour chart, and we can see another divergence here also. If we just make the RSI bigger here, we can see we have higher lows on the RSI, lower lows on the price action. So this is bullish divergence with the RSI going up, and it also corresponds to that same point that had hidden bullish divergence on the daily. You can see we've gotten this bounce. So we could be forming here a W pattern here, which if we do break the neckline here, the measured move would be quite a decent one, and it would take us all the way to 39,200, and we would break this triangle, which of course would lead to an even bigger move. Won't do that measured move, but it would get you close to 50,000. But if we just pull up the EMA ribbon here, this is on the 4-hour chart, we can see we are getting resistance here on the EMA ribbon. So there is resistance to get back into this triangle. The RSI of course has cooled off, and you can see here we also had some bullish divergence here between this point on the RSI and this point here. We see the RSI going up and the corresponding points here on the price action going down. So there was quite a lot of divergence here. And normally when we do come back to test this ribbon, we do get rejected on the first go. As you can see here, we did this W shape here. And we did get rejected right at the top on the yellow line before coming down, making a higher low, and then breaking the ribbon. So a similar thing could happen here, or the rejection could play out and we could go lower. Personally, I do think we are going to break this ribbon and come back into this triangle, but we'll have to see what's going to happen. As I said, there's arguments for both. So you can see we got rejected pretty close to this yellow line, went a little bit further into it and touched this trend line, and currently it looks like we're coming back up for a retest. So that level to break to complete the W would be 33,872. And we can see the RSI has plenty of room to go up on the 4-hour after cooling off completely with this drop. So looking on the daily now, we can see that the daily EMA ribbon actually acted as support here. We dipped into it once, got a bounce, came back, got another bounce, and then we dipped all the way to the bottom of the EMA ribbon. And you can see it pretty much hit exactly at the bottom of this ribbon, and we're currently still in this ribbon. And to break this ribbon, it is at the trend line also, so around 34,000. But we will open a new candle tomorrow. Perhaps this will come down a bit, and it will be a very similar level to break as that W pattern around 33.8. So we have this triangle pattern drawn here, and you can see it broke down and had this big drop. But actually this pattern here is from back in June of 2017 during that bull run, and it is quite similar to the current triangle pattern that we're in and broke down from. This one ended up dropping from top to bottom about 39%. So currently in our current one we're down about 32%, I believe. And I just wanted to show the similarities here. This one didn't quite get back up to the trend line for a retest before dropping again. And we can see once we did bounce, we came all the way back up, and it didn't take long to get to a similar level here and breaking the all-time high at the time. So what I've done is I've copied that pattern from back in 2017, and I'm just going to overlap it with the current pattern just to show the similarities here. And it's only going to be approximate. I guess that would be probably the most accurate. We can see we had a similar run up. We had a pullback here, and then we ran up and we formed this triangle pattern here. We broke the triangle, came down to a similar amount, and then we came back up before taking off. So this is just an example of a fractal pattern. It's not going to play out exactly, but it's just interesting to look at a similar time in the bull run in 2017. We could be at a similar spot in this bull run. So just to measure this move exactly and see what it is, currently we dropped 31% to the bottom, so not as big as the drop that I compared it to, but we will look at some of those drops from the previous bull market. So this is the 2016-2017 bull run here, where we were just starting here before getting to the all-time high. And we can see that I've got the measured pullbacks here, so 38%, 34%, 32%, 39, 38. And the one that we were comparing was this one here. So we are in that range, in that 30% range with this pullback. Could we go lower? We could. We also haven't come back to this 21 exponential moving average on this current drop. And in the previous bull market, we can see that we did that several times. So just a bigger picture here of the whole cycle. You can see that we bounced off the 21 exponential moving average several times. And also I've got this line drawn here around the 50 reading, 55 reading, probably about 52 reading. You can see each time we came back to test this line, we also bounced off this level on the weekly RSI. So this is just a bit more zoomed in to get a clearer picture, and just to show the touch points were the same each time. We did weak below here and here a little bit, there a little bit, but the body never actually closed below the 21 exponential moving average. We can see here we came back to this line pretty much every time except for this one here. So comparing that to the current bull run, this was the crash here in March where we came all the way down to 5,000, 6,000 area. We can see we broke above the 21 exponential moving average. We came back and we got close to it here. We didn't quite touch it. We did touch it here. And we can see we also came back to this 52, 53 line on the RSI. That was our first bounce. And we went higher here. We came back and tested it again. Also corresponds with the 53 level, similar to the previous bull market. And then we had this really big run up here where we didn't have really any pullbacks. Now we're starting to get that pullback. We can see the weekly RSI has come down quite a bit. This is around the 72 level. So if we are going to come back touch this line, that would be at the 53 level. We might need a similar drop as the previous week. And also this is the 21 exponential moving average on the weekly. So this is still quite a far away. So we will look at that in more detail at what levels that's at. So currently it's at 21,770, the 21 weekly exponential moving average. And we will get a new tick on this one in a couple of days. And these are just estimations. It would be around the 22,600 level. And then the following week, which is in about 9-10 days away, would be around 23,400. So we might go sideways here before having a drop. This line could go higher. This could go sideways and we drop later. Or we could go back up and we could come back to this line at another time when the moving average is higher. So just looking at both sides here. So where would that drop line up with that 21-week moving average? Well, if we draw a fib retracement here all the way from the bottom at this point, this is where we had that last big pullback here, and do it to the top, we can see that the golden ratio is around the 22.1 level, the golden pocket, 21,083 to 22,001, which is pretty much where the 21 weekly exponential moving average is at the moment. You could also draw this fib retracement here from this point, because this was a lower low on the weekly, and just drawing it from there, that would put the golden pocket between 26.9 and 26.1. So perhaps this could take a while to play out if we are going to have this drop, and this line could slowly build up over several weeks before coming back into this golden pocket area here. Or we could wick down and touch this line, but still hold the body on the golden pocket area. And just something else interesting, this is the Bitcoin futures chart, the CME futures. I've got that triangle pattern drawn, and I've just done the measured move here, just from the second touch point on the triangle. I haven't taken it from this one, I've just taken it from this point here. And if we do it at the breakdown level, we can see it pretty much takes us into this grey box zone around 24,000. And we can see here there is a massive gap here in the futures chart. It is a almost $3,000 gap there. So this is a possibility that we come down, and even if we just partially fill this gap, that would be acceptable. So it's just interesting that this does line up with this gap. So we're just going to have to watch the price action. We've had this big bounce, so there's arguments for both directions, but it's good to know what could happen if either direction occurs. And now I just want to compare Bitcoin, Ethereum and Link ever since the start of the year. So just put that to the start of 2021. We can see here Bitcoin is the blue line. We can see it's been having this sideways and down action. Ethereum is the red line and Link is the green line. So we can see that altcoins have been outperforming Bitcoin since the start of the year, and this is alt season, usually January, February, March time. We can see Link has just shot up recently. It was following similar levels to Ethereum here. And just to compare the percentages, Bitcoin's up about 10% since the start of the year, Ethereum's up 70%, and Link is up 110%. So if we just zoom out here, so if we were to compare these from the big crash back in March, we can see currently Bitcoin's up 307%, Link is up 554%, and Ethereum's 545%. So I hope you enjoyed watching that video. Hope you found the information useful, and hopefully I can make some videos a bit more often rather than only one every 1 or 2 weeks, and just keep up to date with the price and inform you on what I think is going to happen, and maybe do some live streams with some live trades. So thanks for watching. See you next time on Bitcoin Mamo. Bye.